I'm Abha Bakaya. With me, our global business editor, Udayan Mukherjee. A very difficult time indeed if you're an investor to try and assess the right strategy with markets being fairly volatile, a lot of uncertainty with regards to the way things are going to go. And this is really when you need to reconsider how and where you invest in the stock market. Let's start off with some of those queries. Remember, do keep sending them in to the number on your screen. We'll select a few and answer them on TV and online every Wednesday. Mayank Singh from Kolkata has a question on CAMS. Let's listen in to exactly what his query is.
Hello then, I am Mayank Singh. So I've been holding 20 stocks of CAMS bought at about 3,000. It had gone up to 4,000 and came down back to 3,000 and hovered around 3,000 for quite some time. But now it has fallen considerably below 3,000. When do you see a reversal happening in the stock, and also are fundamentals all right with CAMS?
Yeah, I think CAMS is a good company. I mean, as you know, since you have been tracking the company, it's India's #1 mutual fund registry and transfer agency, and it's a two-player market. CAMS and KFintech are the two players, and CAMS is by far the dominant player in mutual fund registry and transfer. It's a stable annuity kind of business. I mean, as the mutual fund business grows, as more and more people buy mutual funds in the country, you will keep getting regular income stream for CAMS. So that's a very good a bread and butter business to have. But what's also interesting now is CAMS is getting into the account aggregator business, which means that financial data providers can go through CAMS to provide the data to financial data users. So this bridge between data providers and data users is something which might pay off. I mean, it's a new business for them, but in the days to come, in the years to come, I think it might be an interesting place to get revenues from as well. So overall, it's an interesting business and a good play on capital markets and mutual fund penetration in the country. And it's a duopoly, so I don't think profits is an issue for CAMS going forward. The only issue with all of these companies, the mid-cap companies, which are fundamentally good, are that valuations had got terribly extended. So as you said, I mean, it went to 4,000, but now it's come off to about closer to 2,500. Still trading at about 40 PE multiples, so it's not cheap yet. But the good thing about this correction which is unfolding now is that many of these very lofty valuations will skim down to entry points where you can consider owning them. So I think CAMS, to cut a long story short, is a good business, and it's a good story to back, and maybe this correction will give you a better price point to average your holding, but I think it has the makings of a long-term proposition.
Okay, Siri Das has also sent in a query from Dubai, and this one is on Yes Bank. Go ahead.
Hello, Mr. Udayan. This is Siri Das from Dubai. I have around 2,000 shares of Yes Bank. The average buying price is something around rupees 375 per share. Just I wanted to know how long I have to hold these shares, or I should buy more to average out the price, or it is better to get rid of. Thank you.
I'm not terribly gung-ho on Yes Bank. I know that a lot of cleanup has happened on Yes of its balance sheet, and I think they're trying to put the past behind them, and it's a difficult past. But you've seen what is happening with banking stocks right now. I think they are under considerable pressure, not least because of the kind of very high FII holding that the sector enjoys, and that is working against them at this point in time. But the way the sector has underperformed, I think it's better to look at some of the stronger franchises in the private banking space rather than look at Yes Bank. Particularly so if there is some kind of a COVID wave, fingers crossed on that, and things get sticky on the asset quality front once again, you would not be wanting to hold on to subpar franchises in the banking space. So, I mean, if you had to look, I think you are better off looking at the ICICIs and Axis of the world rather than looking at something like a Yes Bank. It is not as bad a proposition as it was 6 or 9 months ago, I'll grant you that, but I still think there are difficulties along the way.